When talking about the Golden Arches, we can't not talk about McDonald's accelerating the Arches growth strategy, which they say focuses on maximizing marketing through culturally relevant approaches and effective communication of brand, food, and purpose. This includes investing in emotional connections with customers and highlighting value at every menu tier. They also commit to their core menu by focusing on iconic products like burgers, fries, and chicken McNuggets. The company plans to innovate these items, such as implementing the best burger concept and offering the McCrispy sandwich in all markets by the end of 2025. Significant opportunities for long-term growth through beverages like coffee have been noted. The 4 key areas to double down on are digital, delivery, drive-through, and restaurant development. In terms of digital transformation, the company is enhancing its customer experience through personalized offers, loyalty programs, mobile ordering, and more efficient service via Ready on Arrival. They aim to grow their loyalty program users to 250 million by 2027 and increase annual system-wide sales to loyalty members to 45 billion by the same year. For delivery, they're working on enhancing the delivery experience and increasing the percentage of system-wide delivery sales originating from their mobile app to 30% by 2027. Drive-through remains a competitive advantage for the company, with nearly 28,000 drive-through locations worldwide, offering flexibility and choice to customers. Lastly, in terms of restaurant development, they plan on accelerating the pace of new restaurant openings to fully capture demand, aiming to reach 50,000 restaurants by the end of 2027, their fastest period of restaurant unit growth in history. McDonald's explains in order to keep customers and restaurant crew central to their operations while striving for excellent service and technology advancements. They're building on 3 primary platforms: consumer, engaging customers; restaurant, improving operating efficiency; and company, streamlining organizational processes. The strategy involves capital investment, prioritizing dividends, share repurchases, and adapting to changing customer demands across different economic climates. This approach is led by a global leadership team aiming for long-term growth through increased guest counts and market share expansion. The company forecasts net restaurant unit expansion contributing over 2% to system-wide sales growth in constant currencies for 2025. They anticipate selling, general, and administrative expenses to be around 2.2% of system-wide sales, with operating margin percent expected to fall within the mid-40s range. Interest expense is predicted to increase between 4 to 6%, while the effective income tax rate will likely fluctuate between 20 to 22%. Capital expenditures are projected to be between $3 to $3.2 billion, leading to approximately 2,200 restaurant openings globally and about 1,800 net additions. A free cash flow conversion rate in the low to mid 80% range is expected for 2025. For more on McDonald's and other companies, follow Ascencore. Thanks for watching and have a nice day.